Hey, welcome back to The Dive. Today on the show, we have the CEO of Sprott Asset Management, John Ciampaglia. He's joining us today to discuss uranium, lithium, the EV transition, how destructive he thinks AI could become, and make sure to stick around till the end to hear all about the 4 new energy-focused ETFs that Sprott just launched. Hey, John, welcome back to The Dive. Thank you so much for joining us today.
Nice to see you again, Cassandra. Thanks for having me.
Okay, so John, the Nuclear Regulation Authority recently approved contentious safety evaluation changes and drafted legislation to allow Japan's aging reactors to operate longer with no maximum limit specified. Why do you think Japan is joining a global shift back to nuclear energy?
Yeah, well, I think last year was a pretty serious wake-up call for a number of governments around the world, particularly those that are highly dependent on other nations for their energy needs. And Japan is obviously one of the largest economies in the world, but it has a fundamental weakness, which is it doesn't have any fossil fuels and doesn't have great endowments of natural resources. So it is hugely dependent on other nations for natural gas and other key commodities. Before the earthquake and tsunami in 2011, Japan had a very large fleet of nuclear reactors. They viewed that as a means to have energy security. And at that time, nobody was really thinking about decarbonization and low greenhouse gas emitting forms of energy. But nuclear energy is obviously playing a very important dual role around energy transition for many countries, as well as energy security. With the price of natural gas last year really spiking, it put enormous pressure on countries like Japan to basically diversify their sources of energy. And that was finally the catalyst that the government had in terms of growing public support because their energy bills were going through the roof to finally announce after many years that they would start to turn back on some of the reactors that have been closed since 2011. So we see this trend happening around the world, whether it's in Belgium or the United States or even Canada, where I live, that governments are making decisions to either extend the life of existing nuclear power plants and in the case of Japan, turn them back on. So we think this is a very powerful trend that is going to continue for some time, all under the focus of energy security. And ultimately, this will lead to higher demand for uranium, and we're starting to see utilities buy more and more uranium as a result.
According to the Washington Post, Rosatom has been working to supply Russia's military with components, technology, and raw materials for missiles. Do you think any sanctions to Rosatom's actions would have an impact on the market?
Yeah, I mean, this is a really contentious issue that the industry is dealing with right now. Obviously, we're coming up to the 1-year anniversary of the invasion of Ukraine, and there is kind of a growing call to arms, so to speak, in terms of putting sanctions finally on Russian uranium and related services. So there are discussions happening in Congress right now, as well as the EU, around this idea of finally sanctioning. Last spring, when there was speculation about sanctions, we did see the price of uranium spike around $10 a pound. It went from kind of $53 to $63 in a very short period of time. As expectations of those sanctions faded, we clearly saw that price spike unwind. The reason why we haven't sanctioned these services as of yet is that essentially we've basically outsourced or outsourced many of these services to Russia over the last 5 or 6 years, and we don't have the capacity available today in the West. And governments have obviously realized this situation, and there are a number of different initiatives underway to increase capacity in the United States, potentially Canada, France, and the UK, to basically make up this shortfall that we need to address the transition away from Russia. So the timing is completely unknown. We think it will ultimately happen. It will probably be a potentially a multi-year kind of transition or phase out, but we think it ultimately will occur. And it will have a positive impact on the uranium market because it will ultimately lead to, again, more demand for uranium as feedstock.
Now, North Korea recently showcased more intercontinental ballistic missiles than ever before and hinted at a new solid fuel weapon. Do you believe news like this impacts the sentiment over nuclear power?
I think there's a very clear delineation between a nuclear for civilian use, which is the vast majority of the capacity, versus obviously the negative news you hear from places like North Korea, and I would add Iran in that category as well. I think nuclear, in terms of peaceful use, has provided tremendous benefits in terms of low carbon energy, reliable energy, and affordable energy, and that's where governments are really focused on right now.
The Biden administration outlined new commitments to expand public charging availability and highlighted the contribution of the Made in America policies under the Infrastructure Investment and Jobs Act. How significant do you think that this is towards the adoption of electric vehicles in the U.S.?
Yeah, we think that some of the policies being announced around the world are going to have profound impacts on our energy systems and our mobility systems. If you look at the infrastructure bill, the Inflation Reduction Act, if you look at the Repower EU legislation, if you pull away the hundreds of pages of these pieces of legislation, you really see that these are really designed to encourage two major themes: decarbonizing our economies through different energy transition technologies, and as well as moving to electric vehicles over time. And also the third part, which I think is really, really important to focus on, is rebuilding global supply chains related to these energy transition and EV sectors. We find it absolutely astounding that the Department of Energy, for example, is making numerous loans to different companies in the United States to help them bring new lithium mines to market, new gigafactories built, and so on and so forth. This is really powerful because the government is finally acknowledging that they do not want to concede the race around these transition materials exclusively to China. China dominates things like the manufacturing of EV batteries. They dominate things like rare earth production. These are all critical minerals to energy security as well as national defense. And the US government, the Canadian government, the UK government are all starting to finally focus on reshoring a lot of these critical supply chains. And that's everything from primary mine production to processing of these materials, and then finally manufacturing. So we think it's a very powerful trend that will play out over the next couple of decades.
Let's talk about lithium a little longer here. The Indian Ministry of Mines announced a significant lithium deposit of around 5.9 million tons. This deposit alone gives India the fifth largest lithium reserve in the world. Where do you think we are right now in the lithium cycle?
Yeah, so lithium has been the best performing commodity in the world over the last 2 years. It had an astronomical lift in the last since about early 2021, and the reason for that is we had a major shortage. What caused that major shortage was we saw what we believe is a global tipping point in terms of EV adoption last year. Last year we saw enormous sales of EVs, the highest they've ever been. And when you look at the adoption of new technologies historically, when you get to about 10% adoption, that represents historically a tipping point where adoption accelerates. We think we're at that inflection point right now with EVs. So as EV demand has increased, it has put a tremendous pressure on primary production of lithium, but also what most people don't realize is, you have to take lithium and then process it into chemical form, which then goes into battery packs. And there's also a pinch point in terms of that processing capacity. And that's why lithium has been the best performing. Now, over time, we will see a supply response, meaning we will see a lot more production of lithium as well as processing capacity come online. But it's going to take several years for it to come online, and we absolutely need it to continue to foster greater EV adoption globally. So we think that there's kind of a race on right now in terms of discovering lithium and processing it. The big challenge is the lag times. It's very difficult to, from discovery to production, that amount of time that you need is sometimes 8 to 15 years, depending on the type of deposit, where it is, some of the, the complications with the geology or water use, etc. So everyone is trying to find lithium around the world. They're trying to find these deposits. I find it fascinating that the U.S. government, for example, recently made a $700 million loan commitment to a company called Ioneer Lithium, who's trying to develop a lithium deposit in Nevada. So when the government is starting to extend loans to companies to bring new deposits to market, I think that is very telling. The other one I would point out was just about a week ago, General Motors made a $650 million equity investment in a company called Lithium Americas, again, trying to develop a lithium mine in the United States, because if you can develop local mines and production, these are all eligible for tax incentives under the Inflation Reduction Act. So U.S. government is saying, yes, you can have these EV tax credits and subsidies, but you have to produce the batteries in the United States. You have to source the materials for the batteries in the United States. This is all part of their grand plan to basically reshore these critical supply chains away from China, and the EU is doing the exact same thing.
Do you think that this could all mean we're at the start of a commodity supercycle?
Yes, we do. We're actually just about to put a new report out that's talking very specifically about a new commodity supercycle that we believe is forming and is in the early stages. We believe that the energy transition is going to be a huge part of what drives this next energy commodity cycle. Other commodity cycles in the past have largely been built on very basic base metals because of urbanization, China building 30 new cities, et cetera, et cetera. We think this commodity supercycle is going to be driven largely on energy transition materials. That's everything from uranium, lithium, copper, nickel, graphite, cobalt. These are all very important materials for electrification, energy generation, energy transmission, as well as energy storage, which basically means all kinds of batteries, whether that's for EVs or large-scale batteries.
So Ford announced that they will lay off 3,800 employees in engineering and administration in Europe. We don't know the specifics, but there are reports that AI is about to play a large role in job destruction. How closely are you watching ChatGPT and the AI sector?
Yeah, it's not something I'm an expert on, but I find it fascinating whether we're moving into kind of a new paradigm with this kind of technology and how it can potentially disrupt certain kinds of job functions. Obviously everyone is trying to figure out ways to utilize technology to improve productivity. And this is something that I don't think is going away. It's still early stages. It's obviously being applied in different applications, but I think more broadly speaking, this is just more of the same in terms of technology, enhancing the way we do things, improving the way we do things, making things less costly, making things more productive around the world. So obviously we have a long way to go. The technology is still fairly nascent, but people seem pretty excited about it.
What do you think are the biggest challenges facing retail investors trying to invest in the energy sector?
Yeah, I would say the biggest challenge that we see is volatility. The markets have been incredibly volatile for the last 9 months. And why 9 months? Well, that's when the Federal Reserve and other central banks around the world decided to take away the stimulus from that they gave us to support the economies during COVID. Take that stimulus away. Interest rates have risen dramatically around the world. That's obviously caused asset valuations to correct. It's also caused a lot of volatility because all of this creates a lot of uncertainty around the path of where economies are going, Are we going to have a hard landing? Are we going to have a soft landing? And with all of this uncertainty, it creates volatility. And that's, I think, the perfect storm in terms of, shaking investors out of the trees and spooking them. I think in January, we saw an improvement in sentiment. People started to think that inflation was finally moderating, and that central bank tightening was going to moderate as well. We've seen asset values in January have very healthy bounces, and then fast forward to February, and expectations start to reverse a little bit, and we see pressure on all kinds of different asset prices. So I think until we get through this tightening cycle, inflation moderates further. We're in this kind of uncertain, volatile time, and I think that's the biggest risk right now in terms of dealing with that as an investor.
Okay, so John, before we let you go, we want to talk a bit about Sprott. You recently launched 4 new ETFs focused on energy transition metals. What can you tell us?
Yeah, so this is really about our big picture thesis about decarbonization, greater electrification, greater adoption of EVs, and all the critical minerals that we're going to need in order to enable these shifts. So much like other shifts that have happened over the last 150 years, we think energy transition is going to be a very powerful theme. It will play out for the next few decades. That doesn't mean we're moving away from fossil fuels tomorrow, but it means that we will be increasingly investing more and more in things like nuclear energy, renewable energy, greater electrification, and greater adoption of EVs. All of these things we find in our research are very raw material intensive. So for example, the amount of critical minerals that you would need in an EV compared to a traditional internal combustion engine is meaningful. And so, as you move to EVs, you're going to need more copper, more nickel and cobalt and lithium, etc. We think these are very powerful themes. The second element of the theme is really about this bigger picture, deglobalization and basically reshoring theme. We think it's really powerful. I've given you a number of examples related to the Department of Energy, Department of Defense. And when the U.S. government starts intervening in some of these different material markets because of national security and energy security, we think these are very powerful tailwinds that the sector is going to benefit from over time.
Before we let you go here, could you outline each different ETF for us?
Yeah, sure. So we have, in addition to our existing uranium miners ETF and the Sprott Physical Uranium Trust, we've added a broad fund called the Sprott Energy Transition Materials. That's kind of a one ETF solution that gives you exposure to all the key materials. That would be lithium, copper, nickel, uranium, a little bit of manganese, a little bit of copper, a little bit of, cobalt, a little bit of graphite. So for someone that doesn't really want to pick a specific material or metal, this kind of gives you broad exposure. We also launched a lithium mining ETF that will just focus on the producers of lithium. We launched a junior copper. We think there's a lot of opportunity for copper over time. It's a key kind of backbone material for energy transition and EVs. And we also launched to complement our uranium miners. We launched a junior uranium mining ETF. And these, these are for investors that have very specific views on these metals. They can play them with these pure play ETFs. If they want to have more broad exposure, the ticker SETM is kind of your one-stop shop. It gives you exposure right across the continuum.
Okay, well, thank you so much for coming on today, John, and sharing your expertise with us and our audience. It's been a pleasure.
Thanks for having me.
To our audience at home, thank you so much for tuning in today. We will be back again tomorrow with another great interview, so be sure to stay tuned by hitting that notification bell and subscribing below me. Bye.